Hello, everybody. We're back, and it's a wonderful Wednesday, and it's time for a little truth or skepticism. Mr. Radigan, how art thou?
Nice to see you. Nice to see you. I'm doing very well. I've been hearkening back to my early days as a financial reporter, so I'm feeling sort of nostalgic. Do you remember there was a column? I'm sure you do. It really had its heyday sometime in the '90s called "Herd on the Street." You remember that column in the Wall Street Journal? It was called "Herd on the Street."
Of course.
Mm-hmm. I would think. And so then there was a famous scandal that was used because I was a junior Cub financial reporter being trained up by the Bloomberg organization at the time.
Well, it was Heard on the Street, Wall Street Journal, or Barron's?
Wall Street Journal.
Wall Street Journal, okay.
Wall Street Journal. And the Heard on the Street column, at least at that point in time, was like the pinnacle. It was like the most important, 500 words in financial journalism was Heard on the Street. Where it was like, this merger is happening, or this CEO is going to get fired, or like whatever the most juicy, financially relevant gossip might be was in Heard on the Street. And it came out that the reporter, whose name was relatively famous at the time, but I don't recall it right now, but the reporter who was writing Heard on the Street was in cahoots, if that's a word, if that's a thing, who's in cahoots with some stock traders, with some individuals, with some financial individuals, and they were purchasing securities that stood to benefit to increase in price before the publication of the Heard on the Street column.
No way.
I'm telling you, this is what they told me. I was a junior reporter. It was used as a cautionary tale. They said, young Radigan, young Sosnoff, whoever the youngsters may have been in the room, let the story of Joe Reporter, whose name I don't remember now, who was the Heard on the Street reporter, be a lesson to you. Because if you're thinking about going into cahoots with any of these financial individuals and purchasing financial securities, that the law will come for you and there will be consequences. This reporter was not only lost his job, he lost his reputation, and he may well have been incarcerated. I don't know. But there were apparently grave consequences both for the individuals and the reporter who had gone into cahoots. Around that time as well, within, let's say, 4 or 5 years of that moment in time, there was a film that you may have heard of called Wall Street. It was made by Oliver Stone. Might ring a bell. And one of the core themes of that film was there was a young broker type individual who he went into cahoots with some individuals, and they were spreading rumors and doing various things to manipulate stock prices where they had a financial benefit from these manipulative practices. Does that ring any bells?
Yeah, sure.
Okay, good. Fast forward, just I believe it was yesterday or the day before, in recent days, 30 years into the future, back in present time here, there's a social media account by a gentleman by the name of Roaring Kitty, I think he calls himself, in which he's disclosed that he purchased a variety of financial securities in cahoots with himself, apparently, and then had started used his posture as a leader of rumors and innuendo and speculation to trigger a frenzy of buying activity in a stock you may have heard of called GameStop. But triggering said frenzy only after securing for himself apparently a material economic position in various financial securities associated with that stock price. What perplexes me, and maybe it's just, it's a matter of time, and these things take time, and the wheels of justice turn slow and all that. And there's been many a sort of, Martha Stewart, my goodness, how can I forget? Martha Stewart went to jail for going into cahoots with a man named, I think, Henry Waxman was his name. He was the CEO of a biotechnology company. And the CEO of the biotechnology company where Martha owned some stock told her in advance of some bad scientific outcomes as part of their cahoots situation that she ought to dispose of those securities before this information was released. She was subsequently indicted, prosecuted, convicted, and incarcerated. Am I wrong to perceive that what is happening now with Roaring Kitty and GameStop is of no different, is just as much a manipulation, a pump and dump, a securities manipulation scheme in the most classical elements of the various state and federal criminal statutes, not to mention the various civil statutes of the Securities and Exchange Commission, that would seem to, at the very least, warrant a material investigation, if not an outright indictment? And does the failure, sir, thank you for giving me this glorious windup, does the failure, sir, to at least investigate, let alone invoke the various criminal and civil statutes that the various authorities, state and federal, might avail themselves to, act as an explicit endorsement of this social media manipulative stock trading behavior in a way that then compromises the very integrity of the most important, deep, and profound financial markets in the world, which are the US securities markets?
There's a part of me that wants to chuckle by the way you've so eloquently explained this. There's the inner Tom wants to chuckle. First of all, it is absolutely not fair to compare Martha Stewart to Keith Gill. The reason being is that Martha Stewart had, and listen, I don't think Martha Stewart necessarily needed to go to jail for a couple of years, or whatever, how long
was it a couple, it was months, but all the same.
Months, whatever it was. But she had access to non-public material, non-public information that she acted on. And that is a no-no unless you are in Congress, which I'm not even opposed to it in Congress, just so let's be fair.
But you're going to get us into a whole other.
No, I'm not going to go down that path.
Don't even open that door. God help us.
I'm not going to go down the material non-public path. But material non-public information, I mean, that's a no-no. And Martha Stewart is very bright. She's very clear of the concept. She screwed up. And you can't.
Okay. Set her aside just because I know we've got an abbreviated session today.
Yeah, set her aside.
Go heard on the street.
Yeah.
Explicit manipulative. I say it in the paper.
Same thing.
I buy the stock. I put it in the paper. Stock goes up.
No. Very different. Heard on the street was people were trading based on what was being written.
Meaning I knew tomorrow's news today. I knew that XYZ was going to be featured and heard. Yeah. So I bought it today because tomorrow it's going to move.
And again, I think that is little bit less egregious than what Martha Stewart did, trading on non-public information. But I mean, trading on material non-public information, but this is trading on non-public information. And therefore, yes, I have a problem with that as well. But again, getting back to Keith Gill, I do not have a problem with what he did because he is, and I'll tell you why I don't have a problem with him. He is a retail investor. And in the history of retail investors,
the position looked mighty institutional to me.
Maybe so. I agree. The position looked institutional, but obviously the guy, I
would say if you own $100 million of a given security, you are not a retail investor.
Unless that $100 million came from $100,000 originally, and which is very possible in this case. And unless this is truly
anyway,
if Roaring Kitty could be an icon in the history of, we talked about this morning. He could be the greatest trader ever. I mean, who knows? But what's interesting to me is, first of all, assuming you have to assume two things. A, that he's not an insider with the company and he had no access to material non-public information, which I don't even know what they would have anyway, even if they had it. And number two, it is his money and he is not being bought, like somebody else doesn't own his social media accounts or they're not financing whatever else it is. But assuming it's his money and assuming that this is all legit, and I'm pretty sure it is because otherwise, why would he even take that risk? Um, I think that I think we are in a situation where we've never seen before. We have a retail investor that is actually being he's being cheered on by the rest of the retail investment community because we've never seen anything like this before. So when Bill Ackman comes out and he says, I bought $10 million worth of, or $100 million worth of XYZ stock. Do you know what everybody goes? Big fucking deal. You're Bill Ackman. Nobody gives a crap what you did. Nobody cares what Bill Ackman does, And so then the next guy, Carl Icahn, comes out and goes, I bought 8% of this company and I love it. After, of course, always after the fact, they're talking their book. And again, nobody gives a shit what Carl Icahn does. Okay. Because it doesn't matter. But here's this retail investor, Keith Gill, doesn't manage a hedge fund. Carl Icahn might be managing the majority of the money might be his, but it might be somebody else's. Ackman, he might be the largest investor in his hedge fund, but it's probably lots of other people as well. There's all these different things going on with these other people. Same with Warren Buffett. They might be the largest investor, but there's lots of other money. And here comes an individual retail investor with his own money, knowing other outside investments, risking everything he's got or whatever percent of it is. And the retail investors actually care because he's one of them. He's just one of them. He's like Dylan Ratigan. If this was you, we'd be rooting for you. If you're Bill Ackman,
like me with my silver position.
I'm not rooting for Bill Ackman, just like I'm not rooting for David Tepper or Paul Tudor Jones. I mean, I'm not rooting against them, but I'm not rooting for
right. But they're not a sympathetic figure in the retail community. They're irrelevant or hated, depending.
Yeah, I'm not going to go like, wow, Paul Tudor Jones, go get him, brother. Or Carl Icahn. Just what you need is another 10 billion. Like I'm not rooting. What I'm rooting for is, everybody wants to root for the little guy. Everybody loves the story. When we had on the, years ago, like Karen the super trader, she turned 100,000 into 100 million for investors. I watched her. It's legit. And here we have a situation where, like here's a guy that turns 100 million of his own money. I mean, turns 100,000 into 100 million, whatever numbers, I don't even care. Whatever it is. It's like it's a fairy tale on the retail side. People love it. And so what, he's talking his own book. Last night I did an interview with somebody and they said, two things. What do you think about this? And before I get into the second thing, and my answer was, first of all, in the world of finance, whether it's financial media or financial service firms or whatever else is, I think this is awesome because it's engaging. It brings people, it gets people excited. It shows that markets are real. They can be actually fair and all this kind of stuff. And to me, that is the coolest part of all this. But like the articles coming out saying, well, Morgan Stanley saying, well, I don't know if E-Trade should keep him as a customer. Now, I think personally that they fabricated the whole thing just so they get the PR around it. But even if they didn't, what's the difference between that and a Morgan Stanley analyst coming out and saying, hey, we love this new offering that we're going to have. Or we love this company that we just recommended that we've already bought 1 million shares in. What's the difference? Except
so
that
I can tell. So can I answer the very question you just posited, which is what's the difference?
Yeah.
So I want so badly to agree with you. I observe and am vulnerable to the appeal of the story of the David who slayeth the Goliath, the fantasy of incredible success and riches from pennies by virtue of some extreme and extraordinary financial event. What's not to like? I do believe, however, that in the legal world, there's a standard that I think would be best described as reasonable expectations. And this is not an individual like Carl Icahn or Bill Ackman or Warren Buffett or Paul Tudor Jones or Stevie Cohen or whoever, Leon Cooperman, coming out and saying, "Oh, I believe in Disney. Or I don't believe in, I think that Cisco Systems is going down," or whatever they think. This is an individual who had the reasonable expectation that if he was to provoke a social media frenzy, that he could manipulate a stock price through rumors, social media, and innuendo. He did not come out and say, "I own this stock." He came out and started a buying frenzy using his social media. And only after the buying frenzy, which is explicit manipulation, he then disclosed that he owned the stock. So I don't think that my point is much the same as it's not Martha Stewart or it's not Heard on the Street. It's also not Warren Buffett or Bill Ackman or Paul Tudor Jones disclosing an 8% interest in a 13F filing after the fact.
That's fair.
It's Carl Icahn saying, it's Carl Icahn knowing that everybody wants to know what he thinks about XYZ stock, and explicitly under reasonable expectation saying, "I love it. I think it's going to be incredible," and doing everything he can to gin the stock price higher only after the event and after he's had the opportunity to monetize the event to then disclose that oh, by the way, I own the stock, but I didn't tell you. And so that to me smells like manipulation. And to the degree to which manipulation is a risk to the integrity of the capital markets, like I wish Keith Gill came out and said, "Listen, I just bought $100 million worth of GameStop and I think it's going to go higher," a la Carl Icahn. Because then it would have been like, oh, but that's not what happened. Keith Gill, without disclosing that he bought the stock, provoked a social media frenzy, knowing with reasonable expectation that he was the axe, as they say in the name, in the modern sense of the word axe, and generated.
He posted a picture and that
reasonable expectations, Your Honor. If you look at the history of this account and this marketplace,
no,
reasonable expectation.
No, that's
overruled.
Overruled. Yeah, overruled. He posted a picture.
No, he didn't just post a picture. He posted the picture in the context of an account with a history and with a reasonable expectation that posting that picture would generate a massive response, which it did. Reasonable expectations. So it's like saying, "Oh, well, all he did was take down a stop sign." Yeah, well, he took down a stop sign at the busiest intersection in Chicago. Reasonable expectation is without that stop sign, someone's going to get hit by a car. So you can't just say, "Oh, he just took down a sign." You're diminishing something. He didn't just put up a picture. He bought a bunch of stock and then deliberately placed a specific picture in a specific situation for a specific purpose, which then successfully created a specific reaction, which was directly to his economic benefit. I don't care about any of it in the sense of any personal benefit or lack thereof. I'm saying it's stock manipulation, and that compromises the integrity of the financial markets, sir.
Yeah, I respectfully disagree.
So tell me why it doesn't how does it not compromise the financial markets to have?
I already told you. I think that there are so many different. I think you're trying to box up a 2024 phenomenon in a 2001 or 1999 box. Meaning that I think you're thinking about
stock manipulation. So you're saying stock manipulation with social media is fine as long as it's 2024.
I'm not saying stock manipulation is fine anytime, but I think somebody who is talking about stock markets and that is a retail investor is going to talk about it in a very different way then they would have talked about it in 2002 or 1992. And when a lot of these rules were written, it was 1982, 1992, or 2002. I don't think what we're looking at right now is, I don't think the rules that you're trying to box this up in don't apply to social media in 2024. It's exactly right. You know, you're talking about somebody that's using Reddit, which didn't even exist until what, 2006 or
But
2007.
why would social media not be a mechanism of stock manipulation?
Well, I'm not saying that social media isn't a mechanism for stock manipulation, but in the case of somebody that already owns a lot of the stock, you have to also respect the fact that he is talking his book.
Right, but he's not telling you he's talking his book.
He's not telling you anything.
Well, he's telling you he's telling the social media world to light the fire. All right, let me ask you what a different, this is going to go nowhere, I can see.
Is
So
that
let me ask
different
you,
than Dan Dorfman screaming that he loves some stock back on CNBC, or or Louis Rukeyser telling you how much he loves some crazy company on Wall Street Week, or letting some shill get on Wall Street Week in 1985 telling you how much they like some other company?
did you used to watch Wall Street Week?
Of course.
Did you like it?
Um, yeah, I think so. I think I liked Louis Rukeyser. Yeah,
Did you ever watch the McLaughlin Group?
sure.
Did you like that?
Not as much as Wall Street Week.
You know, once I was a guest on the McLaughlin Group.
I did not know that.
Yeah. But I was not officially a member of the McLaughlin Group. I was more of like an interloper with the group.
I like interlopers.
Yeah, that's kind of my um, calling card, interloping. So a different angle on this, if you will. Recently, a young baseball player, 24 years old, was reported that he was betting, making wagers, placing bets on baseball games.
Yeah.
Now, understand this baseball player was placing bets on baseball games that he was not playing in.
Yes.
Because he was on the bench.
Yes.
And yet the disclosure of the fact that this baseball player was making bets on baseball games, bets he did not win, I might add.
Sure.
Losing bets. He's now received a lifetime ban from baseball to protect the so-called the moral integrity of the game. So a baseball player who makes losing bets and doesn't play in the game just gets disclosed for wagering, and he gets a lifetime ban to protect the moral integrity of the game. And yet an individual who with a material financial interest in a security explicitly uses social media to manipulate the stock price to his or her advantage, in this case, his advantage. But there's no reason to protect the moral integrity of the financial markets?
There is reason to protect the moral integrity of the financial markets. I think that the SEC, if anything, they overstep, but you're forgetting there's a big difference. The financial markets are two-sided. And and when you bet on sports, I mean, personally, okay, sports, somebody could fix a game, or they could do something, in the financial
From the
markets.
bench?
Well, you don't know that he's on a major league team for a reason, not because he's supposed to be on the bench all the time.
So you're saying a backbench baseball player has more opportunity to manipulate the outcome of a baseball game as a wager than the most followed social media account in the world for a particular stock?
Sure, it's the same thing. You used Martha Stewart as an example before. Martha Stewart didn't work for that company. She was on the bench, but she got basically, banned for life. Same thing. Even if if you work at a company and you're not subject to, and you weren't in the board meeting, so you don't actually know, but you heard through the grapevine something. Sure, you still are that counts. I don't even know what that argument doesn't make any sense to me. Sports betting, it's a different animal, and the rules are clear. Sports betting is black and white. Um, Financial markets are very different. Financial markets are incredibly efficient. Financial markets don't.
I mean, not that efficient. If you look at GameStop, what did it go from 20 to 100 to 20? And I mean, that's that you call that is an inflated, that is a manipulated security, sir.
It's a weird security. Like I like by that I mean it's not your it's actually relatively illiquid, but it is a stock that has a certain reputation that I don't think you're the reputation of GameStop, you're never going to be able to shed it. So I don't think you can compare. I just don't believe you can compare sports gambling to to what's happening in the financial markets in GameStop.
What if I told you that Bill Ackman, Paul Tudor Jones, Carl Icahn, whatever, when that's also stock manipulation?
I think
That
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 there's,
buying that by that Bill Ackman buying something and then coming out and saying I love it, and then dumping some of the stock into a sell-off as he's sitting on CNBC talking about how much he bought it would also constitute stock manipulation.
I mean, if that's the rule. I mean, I always thought that seems to be a much more egregious case, and I always felt like that's wrong. That's why you don't hear us ever. We talk about like little positions, but we never talk about kind of our, like what we own in different companies and our own company, things like that. Like you'll never hear me talk about, we're publicly traded. You'll never ever hear me talk about my own
An opinion
holdings.
on IG or something like this. Like you would
Never,
never.
ever, ever. I would never say a word. I mean,
Yeah,
are we bullish on our own company? Of course. But I
sure.
mean, never going to talk about, what we acquire, sell, anything like that. Never, ever.
But the biggest distinction you're making with Keith Gill has to do with his lack of affiliation with the actual company.
Of course. Of course.
However, like you, all right, let me try this one more way. You remember Stratton Oakmont? That
What?
name rings a
Yeah.
bell?
Yeah, yeah, yeah.
Stratton Oakmont. I believe it was referred to as one of the great bucket shops of all time. It was like a Wolf of Wall Street, Long Island, Nassau County boiler room, pump them and dump them, churn them and burn them. Here's the stock, ABC, put all the old ladies in it. Once the old ladies are in it, we'll sell it. They'll be the bag holders. Those firms were shut down because it was illegal for them, even though they weren't executives at the company, to go actively solicit demand, provoke demand for a stock that they were intending to sell to the so-called bag holders. That's where the origin of the term pump and dump comes from.
That's correct.
Isn't the Keith Gill, Roy Kitty situation a modern version of the pump and dump?
I don't know. It doesn't look like he sold any. So how's he pumping, dumping it?
I mean, but listen, he's clearly pumping it, which
Clearly.
creates the opportunity for dumping it.
Um, he's talking his book. A pump and dump scheme is more like I'm selling you a story so that you buy it. I don't think he's,
Right?
I
But you
don't,
don't think he's selling everybody a story so they buy GameStop from him?
well, it doesn't look like it. He's not spoofing the market. He's not to really truly do a pump and dump, you have to have offers resting above. Like that's the whole scam with a pump and dump. Like you're talking something up so that somebody reaches and takes your offer.
Because you have intent to dump. In other words,
Right.
you're saying the absence of the intention of to dump.
I don't think that that's all there is to it. I think there's more to Roaring Kitty. I think there's more to the whole thing than just that. I think that he has, and I think we have to face this as a real reality of the situation. He has essentially, and this is a market that for 100 years has operated a certain way. He found a crack. He found he there was no there was no way to kind of take advantage of everybody had everything covered. And that's why there was no such thing as a meme stock. We used to have short coverings and we'd have all these other things, but there was no such thing as a meme stock. Okay. And all of a sudden, this guy, through obviously completely by accident, discovered or created the meme stock phenomenon. And so let's just give him credit where credit's due, in that he stumbled into something that changed the world of finance forever. And let's let him have his payday, because he brought a lot of people into the game.
Okay. So my final conclusion for today's discussion. I think you should marry him. Why don't you go marry him? You like him so much? Why don't you
If I
marry
can get my wife to marry him, then we're in business. Because
I think you should go marry Keith Gill. Okay, you like him so much.
I don't even know. I've never talked to him. I would love to do an interview with him on the network, but
Clearly.
I've never spoken to him. I've never interacted in any way. I, I do
But you
trade
sure do
GameStop.
like him.
I actually like trading GameStop, believe it or not, Dylan. And I don't trade it very often because I find the options to be way too wide for me. For a $25 stock, the options kind of suck. I did buy some stock on the last dip. I sold it out. And I did sell a bunch of puts on the last down move, and I sold them. I covered them, so I'm not complaining at all. And listen, I never would have traded GameStop in a million years if it wasn't for that guy. So I'm just another example of, hey, somebody that came to the party because, he opened the doors.
You should marry him.
I think marriage is a little bit, that's a little bit,
You can make him. Then why don't you invite him to play golf? Make him your friend.
I would like him to be my friend. I can learn something from that guy. I sit around every single day trying to create virality, and I can't do it. I mean, I need that guy to come in. You know what? He should run our social media team because he's far better than anybody we have. So yeah, I mean, the crazy thing about this kid now, I don't even know if he's a kid anymore. What is he, 35, 40? I don't know.
The slightest. He could be 70.
I don't know. But the funniest thing about him is if he wanted a job as a social media manager, he's worth a lot of money. So I'd like to put this offer out there. He can be our social media manager. And
standing offer.
Standing offer. I'll write you the blank check. You come on in here, because I've been looking for somebody that can create that kind of virality for a long time, and haven't been able to do it on my own.
All right. Well, we'll send him a note. We'll send him a tweet on your behalf.
All right. All right, Dylan. Fun discussion today. Unfortunately, I have to keep it short today because I have another engagement, but no Truth or Skepticism next week. It's going to be one of the only times of the year we miss one. I think every year we miss about one. We are going to miss Truth or Skepticism next week because I will be away next Wednesday, but I'll be in your neck of the woods, whatever that means.
Sure.
I'm within a train ride.
If you find yourself in trouble, I'll come get you out of jail.
I need you to bail me out. I know where you are.
I'm on standby.
If I end up in an international jail, something went horribly wrong, and you probably don't want to bail me out.
I'm your guy. No, I'll call ACS, get the embassy involved. We'll get you sorted out.
Perfect. All right, Dylan, have a great week. Everybody have a great week, and we'll talk to you in 2 weeks.
All right. Bye-bye.